Hello everyone, I'm Ujjwal, Equity Research Associate at Desvelado Advisory. We are starting a new series called Noisemaker, under which we'll be covering listed companies which have a small market cap and that are showing good prospects. They are basically refined on the basis of our analysis. Please keep in mind that this is not a buy or sell recommendation in any sorts. So for today, we have shortlisted three companies. The first one is Premier Roadlines Ltd. The second is Vilas Transcore Ltd. And the third is Concord Control Systems Ltd. We'll start with Premier Roadlines Ltd.
That understands India's commitment to growth and development, and we are playing our responsible role in the nation's progress.
Premier Roadlines Ltd was founded in 2008 and it recently got listed in May of 2024. It basically specializes in logistics solution, focusing on land transportation of goods ranging from 1 metric tons to 250 metric tons across India. The company provides general transportation services. Recently, the company has received an order worth 5 crore rupees from a company in defense sector for transportation of goods, marking the company's entry into this industry. This order has to be executed in 1 year. Coming to the future outlook for the company plans to utilize IPO proceeds. As it has been recently listed, it plans to utilize the IPO proceeds for growth, repayment of debt, and strengthening the balance sheet. And following the recent quarter results, the company fulfilled approx 26,000 orders, served 940 customers with an average revenue per order at 86,373 rupees. Coming to the financials, there is a 19.3% growth year on year in financial year 24. Moreover, the margins have also improved. The EBITDA margin and the net profit margin have increased by 200 BPS and 210 BPS year on year respectively, taking the current EBITDA margin to 9% and net profit margin to 5.7%. If you look at the price chart of the company's share price went from 98.7 rupees to 130 rupees in a matter of 4 months, giving investors a return of approx 32%. Now heading on to the second company that we have covered, it is Vilas Transcore Ltd.
Electricity is like the air we breathe. A transformer transfers electrical energy from a circuit to another through coils.
Basically, the company specializes in producing and supplying power distribution and transmission components, including CRGO cores and coils. And their products are designed for power and distribution transformers as well as current transformers, serving both domestic and international markets. Very recently, Mr. Nilesh Jitubai Patil, who is the chairman and the MD of the company, purchased 10,000 shares at rupees 425 each, totaling an investment of 42.46 lakhs. Now coming to the future outlook for the company, the company expects the capacity to increase 3x from 12,000 metric tons per annum to 36,000 metric tons per annum by the end of Q3 financial year 25. And moreover, it is aiming to increase its market share by 4%, targeting growth of around 1.5 times. And for the current year, they're expecting a growth of 35% to 40%, around these numbers. And coming to the current financials, the company reported revenue growth of 10% year on year, and the profit margins have remained steady. Currently, EBITDA margin is 10% and the net profit margin is 7%. Taking a look at this company's price chart, the company's share price went from 215 rupees to 442 in a matter of 2 months, approximately giving its investors a return of 106%. Now the third shortlisted company is Concord Control Systems Ltd. Basically, this company manufactures railway coach products and electrification components for Indian Railways. Coaching products contribute to about 90% of the business, and the rest 10% is contributed by traction products. Recently, the board of directors have sanctioned the issuance of 3,20,000 equity shares, priced at 1,570 rupees per share, amounting to approximately 50 crores. The subscribers include Ashish Kacholia, Ms. Asha Mukul Agarwal, and Everest Finance and Investment Company. Talking about the future outlook for this company, the company is targeting 40 to 50% CAGR in revenue over the next 3 to 5 years. Moreover, the company intends to keep its EBITDA margins somewhere between 23 to 25%. This has been given by the management. This is as per their guidance. Heading on to the financials for the company reported a 34.2% increase in revenue year on year in financial year 24. Moreover, the margins have also improved immensely. The EBITDA margin improved to 27.43% in FY24 from 16% in FY23. The net profit margin has also increased. It has increased to 19.9% in current financial year, that is financial year 24, from 11% in financial year 23. And coming to the price chart of the company's share price went from 121 to 1,870 rupees in approximately 2 years, making this stock a multi-bagger in the course of 2 years. Rest, that's all for today. These are the 3 stocks that we have covered. In case you want a more detailed report on the mentioned stock, where we have covered the some of the ratio, the shareholding pattern, everything else, you can check out our Noisemaker PDF, which is uploaded on our website. We upload it daily. The link of which it will be mentioned. So thank you for today, and make sure if you want to share your views, please comment and share your opinion regarding the stocks that we have covered.